Hello, everybody, and welcome to the Talk AI Summit, a global gathering of builders, operators, and thought leaders who are shaping the future of work with artificial intelligence. I'm Peter Ketchum, part of the team here at Signals, and your host for this special Talk AI Summit recording and conversation here. So this session is part of a pre-recorded content that's being released on the day of the event for the Talk AI Summit 2025. You can follow along with all of our sessions at talkaisummit.com and across LinkedIn and YouTube. You will find us there as well. Today, I am being joined by someone who's been pushing the boundaries of AI long before it was mainstream. Marc Stein is the founder and CEO of Underwrite.ai, where he applies machine learning techniques inspired by genomics and particle physics to reinvent how credit risk is assessed. He's led multiple ventures across fintech space, from microlending to global fundraising platforms. Previously served in CTO roles at JP Morgan on projects with NASA. Marc's background spans from NASA to the FCC and lifelong pursuit of blending scientific innovation with real-world business impact. Marc, great to have you here. I'm excited to jump into this conversation.
Thanks, Peter. I'm looking forward to it.
Excellent. Well, before we kind of go into the questions, we were talking a little bit before we started the recording of this session, and really understanding more about Underwrite.ai, how it was built, because it's kind of some of those fundamentals in the blend of what you find in biology within physics, and then how that applies to AI is kind of going to be important in how some of the answers and questions that we go through today. Would you mind telling us a little bit more about that?
Yeah, no worries at all. I had exited from my last venture-backed opportunity, and was looking for what I wanted to do next. And I really didn't want to do another venture round, and I really wanted something that was closer to my heart. And I started building machine learning models of cancer risks, specifically prostate cancer risk, using microRNA data. And I found I was able to build, these very effective models with rather small sample sets. And I decided to look at, well, how do I monetize that? And well, what I discovered is the first step in monetizing a laboratory diagnostic test is raise $100 million. And I wasn't up for raising any more venture money. So I decided, well, how could I kind of repurpose the work that I had done with something I understand that didn't require any capital? And so I started applying essentially the same model as cancer to the study of subprime lending, deep subprime lending. And I found there was a remarkable similarity, which is kind of frightening. But then I just signed up a lender as a beta tester to evaluate the effectiveness of this model. And we were able to reduce their default rate from 40% to 9% over a 6-month period by iteratively providing feedback into the model and continuously retraining. So at that point, I knew that the model of nonlinear dynamic models very much works. And that was the foundation of Underwrite. We then started charging the beta tester and started signing up additional lenders. And that was about 10 years ago. Wow. So that was way before the current AI craze, but I've actually been working in AI since about 1980. So I've seen a lot of AI summers and winters, and we're in a real AI summer right now. So
yeah, right, quite the summer. So you've been in AI for quite a bit. You've seen a lot of the cycles, and I think it's interesting that you mentioned there the details that can be found there. And I think today, if we're going to kind of use some of the words that people might associate that with, and tell me if I'm right or wrong here, but that sounds like what you were doing before and do now is what a lot of people are saying, oh, that's prompt engineering. And like you have those levels like, oh, I can write an email for me, right? But that kind of prompt engineering is like way in-depth, scientific, like foundational type of, is that
yeah, I would clarify. We're not using large language models for underwriting. It would not be compliant with the regulations, and it also wouldn't be very accurate. We use statistically based machine learning, which can give us an exact explanation of how it made a decision. You can't really get that with an LLM. So whereas, yes, if we're working with LLMs, and we do work with them for other things, but not for the actual decisioning, you're engineering a prompt, right? And so you're trying different approaches to the prompt. You're changing the prompts. And one of the things that we'll do is we'll change the prompt and get an outcome, and then we'll save the outcomes, and we'll ask the model or a different model to synthesize those outcomes. So we get some degree of consistency and flirt with idempotence with LLMs. So that is something that we do, but I wouldn't classify, the work that we were doing 10 years ago is certainly not prompt engineering, because there were no such thing as large language models. Yeah.
Right, right. Okay, yeah, super helpful. Great distinction. So with that said, then, when were you, as you mentioned, a lot of experience here with where AI has come, where it's been, where it's at now, and really good insight and interested to hear where it's going. But what first convinced you that AI could be that pillar, that serious strategic lever that would help inside enterprise workflows?
Well, I think even when I was working in the 1980s, and I was doing a lot of work with speech recognition then, I could see that this is something that can have tremendous impact, not just in the enterprise but in society. But the problem in the 1980s is the computational power just wasn't there. For instance, you could underwrite a mortgage in 1980, and Countrywide did some work with that, but the computational resources that it took were more expensive than the underwriter's time. So, we've gotten to the point today where the computational resources are cheap enough that having an AI do these things is actually more economical. So that was really the big transition, is really the cost of processing power, the cost of storage, the speed of internet connectivity. Those were all the game changers. The ability of AI to do these things has always been there, but it wasn't really cost effective. And today it is.
Yeah, no, that makes sense. So now that it is more cost effective, it's more accessible now. More people are using it, more companies are using it. And now we're kind of facing some challenges internally of applying and incorporating these new technologies and tools. What are some of those challenges that you're noticing or seeing out there, maybe with clients or so forth, that what are they facing, and kind of how should they go about deploying these so that it's not only works today, but down the road?
Right. Well, I think the first step is, if you're considering the application of AI in your business, you need to ask yourself, the key question is why? What do you expect it to deliver to you? And then you need to really codify what are the metrics or KPIs that tell you whether it is in fact delivering on your expectation. A lot of times you have business leaders who are afraid they're going to be left behind. All the cool kids in the other boardrooms are doing AI, and if they don't have it, they're going to look out of step, right? So they want to have an AI project, but they don't really know what it is that they're trying to do. So you really need to define what it is that you expect from AI, because AI is just a tool. I mean, it's no different than a hammer, or a microscope. You have to know how to use it, and you have to use it in the correct application. The hammer doesn't work very well with screws, and there are AI systems that won't work very well with a given problem. So you also have to understand the difference between the types of AI that exist. So what everybody's very familiar with now are things like ChatGPT and Claude from Anthropic, large language models, right?
Sure.
And large language models, I mean, are incredible, and they progressed at a rate that simply defies imagination. I mean, the rate of change is just not like anything that's ever been seen in technology before. Automotive technology was transformative, but it certainly hasn't progressed to the point where automobiles became unrecognizable in a year. But the important thing to understand about using a large language model, particularly in a regulated industry, is that we don't really know how they work. No one really knows how they work. Anthropic's done some great work to try to, get some understanding into the nature of these models, but it's very much incomplete. So when you get an answer from a model, you can't really accurately interrogate it as to why it reached that decision. It's just buried in millions and billions of parameters. And that becomes a very real problem in a case where, in lending, for instance, you have to comply with the Fair Credit Reporting Act, right? And so if you deny someone a loan, you have to explain to them why you denied the loan. Well, LLMs can't do that. And so it creates a real compliance problem. So what we do at Underwrite is we build models that are statistically robust, that can fully explain what they do, and then we can feed those into an LLM to allow a more conversational experience. But the LLM cannot be making the decision. So as an executive, if you don't understand the difference between what a gradient boosting machine does and a large language model does, you may find yourself in real regulatory hot water. So you have to understand what kind of model can perform what kind of task. LLMs are absolutely wonderful for handling customer inquiries, processing emails, chatbots that can do customer service. Perfect for that. Anything where you need to always receive an exactly correct answer every time, LLMs don't work because you can ask an LLM a question 3 times and get 3 different answers. It's what's called a lack of idempotence.
Right.
That doesn't work in a regulated industry, and it shouldn't work in any critical factor within an organization. You need more rigor.
Got it. Got it. No, fascinating. So when you understand that why, what you're looking for, what's next? You say, okay, I've got it. I think I know what we're trying to accomplish. I know the KPI that we're trying to really nail. They do their research. Then what do they need to? What are their next steps that they need to really consider to make sure that
Well,
they are
they
meeting?
need to run it in the wild and measure the feedback. And the type of models that we build are dynamic. So what we do is we build a model for a lender,
Okay.
and we provide them that model by an API, and they make loans on it. And then we ask them to feed back to us the payment information on the loans that we underwrote.
Mm.
And then we take that payment information to retrain the model. So the models continuously learn, they continuously improve. And the critical thing is you measure based upon your KPI. So if you're a lender, let's say that your measurement is 60-day lates are bad, right? Well, we start measuring, and we said that you should, for this model with this score, you should have less than 2% of your portfolio have a 60-day late. We look for early indicators of 60-day late status, and then we can retrain the model if we're off. What our models do is they're a floating point number between 0 and 1. And so they correlate to a probability. So if a score that we provide a lender is 99.25, that means that there's less than 1% probability that the loan will have a 60-day late during the term of the loan. And so what we're looking for is compliance with the prediction that we made and correcting where we're wrong. So the models get continuously better.
Makes sense. Yeah, that feedback loop is super important, right?
It's critical. It's critical.
It's
Yeah. And then
optimization. Yeah.
we build a type of model that's called human in the middle feedback loops.
Okay.
And we had a very interesting use case. We were working with a major subprime auto lender in the UK, and they had remarkable control of their business. They had about a 3% charge repo rate on subprime and deep subprime lending in the UK, which is just absolutely remarkable. And they came to us and they said that, well, we don't want to improve our process, right? I mean, we've got it nailed down. We don't need to lower our charge-off rate. We need to increase the speed at which we do it, because we have 150 human underwriters, and it takes them 2 to 3 days on average to decision a loan. So we built a model that took the expertise of their human underwriters, and we got it down to 2 to 3 milliseconds instead of 2 to 3 days.
Wow.
And what we did then is we deployed that initial model, and it allowed them to move from the brick and mortar space to the online space and be competitive, and they became the fastest growing fintech in the European Union.
Wow.
When we initially released the first model, we had an 88%, an AUC of 0.88, which is essentially we were 88% in compliance with the decision of their human underwriters.
Okay.
And then we went back and we talked to the human underwriters, and we asked them to tell us where they didn't agree with the model's output. And we retrained the model, and by going back and forth and iterating with the human underwriters, we got to a 0.98 fitness, and eventually to a 0.99 fitness with that model, because we ran it for a number of years. And so we could predict what the human underwriter would do consistently 99% of the time. And that was really a game changer. And the key to that was the feedback loop from the human underwriters. Now, I mean, if we had simply stuck with 88% accuracy, that would have been fine. I mean, they were very happy. But the fact is, by incorporating that loop, we could get much higher throughput and performance. And I should clarify, this did not result in them firing underwriters. What it really did was allow them to move into an online space where human underwriters simply couldn't play, because they needed a decision immediately. And also in the brick and mortar space, they could use this. But what I encourage them to do is look at this as an advisory, because when you look at your application volume, you'll see that the majority of your application volume, or at least 20% of your application volume, is a no-brainer at the top. And at least 20% of your application volume is a no-brainer at the bottom. These are the ones you're absolutely never going to approve. And the ones at the top, you'd be crazy not to approve.
Mhm.
So that allows you to immediately reduce what human underwriters need to look at to 60% of the volume of what they were seeing before, which makes their jobs easier, which then increases the throughput. So instead of taking 3 days, it might take a day and a half, 2 days.
Mhm. And that's interesting because in any industry, other companies, they apply this kind of insight. That's not what kind of the average person is going to see on the floor, right? For example, those lenders, they might not say, "Hey, is this coming in to replace us?" Like, "Oh no, it's just going to take what you guys can do, easy. It's the easy, monotonous stuff. It's going to handle that. Now we can scale. Now we can build." And I think that's happening in a lot of areas as well. We're seeing that in different industries where folks are saying, "Hey, AI is going to take my job, or it can do it. It's going to do it better now. Now what am I going to do?" Like, no, it's going to take the monotonous stuff that can be repeated over and over. That's easy. Now let it handle that. Now you do the creative stuff, the things that it really just needs that decision making and human touch.
But it does have a negative impact insofar as that what actually happens is, it's a tool. It's a tool which speeds everybody's performance, right?
Right.
So now one person can get done what two people used to do. Business being, unfortunately what it is, it's not going to take long for a business to say, oh, well, maybe through attrition, we don't really need two people in that position. So we are seeing that. But in terms of one of the real questions that I often hear as well, should I go into programming because now programming is mostly being done by AI? And the answer is there's still a role for programmers. Programmers aren't going away, but it's only the best programmers who really are going to have the job security. So you really have to up your game, and you really have to know how to best leverage these technologies so that you're at the top of the pack, because these industries are transitioning very, very quickly.
Yeah.
Radiology is a good example. I mean, using AI-based systems, a radiologist can process many, many more scans than they can do visually. And that's going to have an impact, right? But considering what the backlog or how long it often takes to get, a scan read, it's still a good thing. But there are, like all good things have a downside as well.
Yeah. Well, we mentioned kind of the employee's perspective. How do we shift that now from like a go-to-market leaders and teams? How do they kind of take away that fear of AI from the organization to help them move forward and actually apply and use AI and look for more use cases to use it more rather than less due to?
I think they have to commit to working with their employees to get them to see that this is a tool and not a replacement. Because it's not a replacement. AI cannot do what humans do. I mean, AIs don't form intent. They don't have judgment. They don't have ethics. They just kind of they can do remarkable things, but they're not human beings, right? I laugh when people say, "Well, what happens when an AI has consciousness?" Because AIs don't have consciousness. They're a computer. Just a model running a bunch of parameters and dealing in weights. So, I mean, they're not really going to be a replacement for human beings. They're not going to write a symphony like Beethoven could. They're not going to create a piece of art like Picasso could. They're inherently derivative in what they produce because they can only produce, at this point, can only produce what they really have been trained on and modifications of that.
So
they can create unique works, but they're all based upon what they've seen before.
That's great. And so what I'm hearing from you, Marc, here is just work with your teams, educate them, kind of let them know what the plan is. How are we going to use this? Work hand in hand. And it's not just one of those things where, hey, go use this and make it better. Go let this replace. Go let this replace the job.
I would say a smart company is also going to make a commitment to their employees to say, look, we're bringing this in to empower you and to make you more efficient and allow you to get more done during the day. And we're going to commit to you being here, for this process. And if you're smart about it and you empower every employee to be 50% more productive, you've got to stop thinking about, oh, we can use less employees, and start thinking about how can we use that increased productivity to leverage the business to do more things and generate more revenue. So how do we not reduce headcount, but increase what we do? And that's something that boards need to take into account, and CEOs need to take into account, and middle managers too. It's not about cutting staff. It's about improving performance. And if you think of these things as a tool and not a replacement employee, you'll be much better off.
That's great. That's great insight. So Marc, let me pivot a little bit here from, and I guess not too much of a pivot, but when we think about AI and all the changes that are coming, A lot of information's out there, well, mostly I would say is a good intent to share information, but it's not always the right information, and it may not always be applicable. So what's your advice on how do we spot like what's good AI strategy, good AI advice versus stuff that's just kind of noise out in the market right now?
Well, what I would do is, one of the things like when we build a model, right? And if somebody comes to me and says, well, we're looking at a number of vendors and we want to know who we should work with. And what I always tell them is take an anonymized data set, send it to me, send it to them. I'll build the model. I'm not going to charge you for it. And I'll give you the results and you can measure how it would have performed for you. And if another company wants $30,000 to build, to do that data study, run away. We don't charge up front. We charge transactionally. So I would be very leery of companies that want big ticket assessment charges, implementation charges, or want a consulting agreement for $50,000 or $100,000 before you actually can do anything. I'd ask people to kind of prove that what they can do. And I'd also try to find people who've done implementations before who can provide some insight as to how this would work within your organization. There's a lot of fluff out there, and I mean, the same rule still applies. If it sounds too good to be true, it probably is, but a lot of the stuff from LLMs really does sound too good to be true. So some of it, right, is valid, but a lot of what's being pushed is not. So you just have to kind of take it with a grain of sand and try to get vendors to quantify what they're actually going to provide you in terms of lift, right? That if we implement your model, our time spent to solve a customer support problem is going to go down by 10%, right? Yeah. Or have a metric that you can actually measure and then hold their feet to the fire as to how well their solution works.
And that goes back to what you said earlier about know your why first. What are you trying to solve for? Because if you can't, then what are you measuring against, right? So
yeah, I mean, don't launch a depending upon the size of the company, don't launch $1 million initiative because you want to be playing in the AI space and you're curious as to what it might produce. No, you got to know exactly what it's going to produce.
Yeah. Right. No, 100%. Now this does lead me to another question though. So you're part of the organization. Let's say you're one of the executives there. You get a insight from the boards or your founder, CEO, and says, "Hey, we need to be a part of this AI change." Right. So I don't really have a say of it. They say, "Hey, go find some products, apply it. Let me know what your AI investment strategy is, or how you're going to apply AI in for Q3, Q4, or for 2026." So if they're getting this directive and they're going to have to come up with the why and where the ROI is and kind of all of these metrics and justify it. And when there is a lot of noise, what would be your recommendation?
Well, I mean, that's what you pay a CTO for, right? The board makes a decision they want to be in AI, and the board will be the first people to tell you they don't know anything about that stuff, right? Hopefully they have a CTO who does. And right, then the CTO's job is to say, okay, of all the things that we have to do at this company, here's the low-hanging fruit that we could apply AI to. And then let's take one of those and say, okay, how would we measure whether it worked or not? And also, very importantly, how long will it take us to know whether we screwed up or not, right? Because for instance, if you do 3 years, 36-month term loans, and you're not going to know whether it worked or not until you get to month 36, it's kind of late to decide that your AI didn't work, right? Yeah. I mean, you'll have early indicators, but if you can, set it as something where you get immediate feedback and you get results quickly. So for instance, if you implemented a new chatbot, how well does the new AI-based chatbot perform versus the kind of old, dumb scripted chatbot? And you can measure that performance in terms of how many seconds does it take for somebody to complete a task? What's the user satisfaction with that task? So, you try to find KPIs that will mature in a short enough time frame that you can effectively iterate the model. And try to find things that, A, that are quick to validate, and B, that will move the needle of the business. I mean, don't invest money in something unless it's actually going to improve the bottom line of the business. It isn't really important to be one of the cool kids with AI. It's more important that everything that you're doing as an executive is increasing shareholder value, driving revenue, improving the performance of the company, and making life better for their employees and their customers and the public. So
Yeah, no, that makes sense. That makes sense. So from the standpoint of where companies are at right now, do you feel like a lot of companies that you're seeing, you're dealing with, that they're ready for these kind of agentic AI initiatives or the autonomous decision makers being incorporated?
Well, I would say that, we're not actually going to have, autonomous decision makers. I think that we have agents that perform specific tasks. I mean, we've written a lot of agents, they do specific things, but they don't make a final decision, right? The final decision has to be guided by regulations, by policy standards, human beings, right? So again, it's speeding up the process to get to that final decision point. I mean, when you're talking about loan processing, yes, you're going to reach a final decision quite quickly. But what underlies that is a whole series of standards that have been established, which then informed the underwriting model. So I don't think companies are ready to turn over critical decision making to agents. I also think that the reality is, in most industries, if you ask a board member whether they use AI, they say, "Oh, of course we use AI. We've used AI for 3 years now." Well, what does it do? Well, I don't really know, but I mean, we use the hell out of it. And one of the things that I found is I work for a bank and I audit some of their lenders, right? And the lenders will all say, "Well, we use AI extensively, right?" And when I'm doing the audit, it's okay. Well, show me the AI that you're using. Well, we don't really use AI. We just use logistic regression, but it's kind of like AI, and it's nothing like AI. So, I mean, one of the things that I found, particularly with a lot of venture-backed startups, is that they've pitched investors that they're going to use AI to do their loan underwriting, but they didn't figure out how to do that. So that's not really what they're doing. But because they told the investors, they have to kind of maintain the fantasy, and so it's still on their website. They're an AI-based company. Well, they're not an AI-based company. So there's a lot of that. There's a lot of catch-up going on as well. But I think that companies are ready to implement AI in their processes, and should be moving forward. And agentic AI is a good example because you can do so much with it. But I don't know that it's as widely implemented as people say it is.
Yeah, no, 100% agree. And one thing that's coming to mind as we're talking about this is, it was, as we're saying, like, you don't want to just jump in to be a part of the group with the cool kids, right? But at the same time, it's not going away. It's something that you want to start becoming familiar with and start applying in strategic ways that you can begin to evaluate so you can scale as improvements and understanding initiatives and the KPIs and it makes sense to begin to scale, right?
Right, and if your competitors have empowered their employees to be 1.5% as efficient as your employees, you're not going to be able to stay in business very long, right? So the clock is ticking. Those companies that effectively leverage AI and do it in a smart way have a huge advantage over legacy companies that don't. But what legacy companies deal with is they have systems that are very disparate. They don't talk to each other, and they have systems that were written 20 years ago or 30 years ago, or banks could be 40 years ago. They're still running on mainframes. Those kind of companies, they have to unpack what they're doing to get access to the data that the AI needs. So they need to put in place the financial side to create modern systems, that bring data together in data lakes where their AI can talk to the human resources department and the accounting department, and the finance department. You need to be able to connect all those. And that's what's really lacking in the larger enterprises. When you're working with smaller companies and newer companies, it's not nearly as big a problem.
They don't have all that to sift through.
Yeah.
Okay, well, just due to time here, Marc, we've talked about a lot of really good things here, really great insight, but let me ask you, kind of looking ahead, 6 months, 3 years, what's going to be the next smart move? What do leaders in the industry want to be thinking about today so they can continue to advance and stay ahead of what's going to be coming up down the road?
There's absolutely no way that anybody's going to stay ahead of what's coming down the road, right? I mean, you want to kind of stay current on what is the current state of the art. What are these, the large language models doing? Because they're iterating very, very quickly. What is a company like Anthropic and OpenAI? What are they doing, or Google, and how you can leverage those things? But we don't have any idea where those companies are going to be in 6 months from now. So you really have to work with what the state of the art is today, and not necessarily the bleeding edge. What can, what is a practically applicable tool that you can build with the technology that's around today. And don't worry about, where this particular technology is going to be a year from now, because the people who are building the technology have no clue.
Yeah. Well, that's great. No, thank you, Mark. I
It's
appreciate that.
reassuring, isn't it?
Yeah, it's like, yeah, they don't even know. You just keep going.
No, it's the models kind of take on a life of their own. They're producing emergent behaviors, and they're doing things that they weren't really expected to do, and that changes the game. And the game is changing continuously. And they're still just computer models. I mean, they're not real. And if you pull the plug, they stop working. But I don't know just where things are going to look. I mean, we'll probably look back a year from now at this and say, boy, we really missed the boat. There's so much that has changed completely.
Yeah. Well, as we conclude here, any final thoughts to leave with the audience before we wrap up here?
I would say, you're not wrong to be concerned if you're not implementing AI. You need to be if you want to be in business in the long term, because it is completely transforming how the world works. I mean, it's going to transform how every business or industry works. And it's much better to get on the boat now than think that you can just keep sailing along and, you'll kind of be okay with your legacy model, because things are changing too rapidly.
Oh, that's great. That's great. Thanks so much. Again, thank you for joining us at the Talk
Thank you.
AI Summit. It's a pleasure having you here. And to those watching, thank you so much for joining us. And our guest here, Marc Stein, founder and CEO of Underwrite. Again, thank you, and please enjoy the rest of Talk AI Summit.
Thank you.